Learn how you can take advantage of volatility and options. Hi, my name is Omar. I'm an educator at Trading Alphas.
And my name is Matt. I'm also an educator here at Trading Alphas. And today we're going to be going over a trade on Zoom that net over 200% in only 4 minutes.
This day, the market was strong due to Trump revising his negative stance on the new stimulus bill the day before. Looking back, the previous day, we have a strong downturn, and I will explain why. Trump lashed out in a series of tweets instructing his Republican representatives to stop negotiating until after the election, which then, if he were to win, he would pass a major stimulus bill, according to him. These tweets came out during market hours and they really shook the market. See here, they came out at about 2:48 p.m. Now, if we go back to the charts, we can see here SPY, which is the ETF for the S&P 500. And we're also on a 5-minute time frame. So right here at about 2:48 p.m., this Trump tweet came as SPY was approaching a very critical level at 342.26. And we had a strong, very, very strong and aggressive downturn because Trump was not going to negotiate coronavirus relief until after the election. But in a sudden change of course, Trump reversed course and actually went on to say that he would be willing to sign smaller, separate bills. In addition to that, there was good news regarding Trump's health after being released from Walter Reed Hospital. Trump went on to talk about how great vaccine development was doing. Both of these factors set the market up for some bullish sentiment. Getting into Zoom here, a Mizuho analyst upgraded Zoom to a buy rating and raised their price target to $550, which was 15% above Thursday's closing of price $478.55. Now, very quickly, let's just go over stock upgrades. Analysts from hedge funds and banks publish these research reports on a company stating their view. Upgrades for a stock means that the analyst thinks the company will continue to do well. Generally, price target raises give a price that an analyst thinks the stock could reach in the next 12 to 18 months. This sometimes creates enthusiasm in its investors. There's an increase in demand that moves prices higher. Now, don't take a price upgrade as an automatic buy signal. It's just an analyst's opinion. Do your own due diligence, like Matt will show you right now.
So now for the technical side of things, first I'd like to explain how this trade became so profitable in such a short period of time. When you're trading contracts that expire that very same day, you're trading with a very high risk of it expiring worthless because there's not that much time for the stock to move in your direction. Combining that with a far out of the money strike, you're balancing high risk expiration with a very unlikely strike price. And that extremely high risk, along with the calculation of implied volatility, is what allows a contract to move such high percentages in such short periods of time. If we look at the daily chart, you can see Zoom did hit a high of around 528, 529, and the next day it hit a low of around 457. And the following days, it continued on to form this sort of falling wedge pattern, which consists of lower lows, lower highs, and then eventually it would continue on to break out upwards. So that's what I was watching for. If we look at the 1 hour chart, you can see that the price has been holding above the 100 EMA for about the past week. And during pre-market hours, you can see this even better here on the 15-minute chart. The price started to break out here of the upper trend line, causing the breakout of this falling wedge to look promising before the market even opens. Seeing this and looking back at past breakouts on Zoom, I knew that if it were to break out right at open, it could definitely fly. The way I saw it was if I was wrong, then I'd be able to use my stop loss at around 20 to 30% and lose only a little bit of my investment. But if I was right, I could end up doubling or even tripling my initial investment. By choosing a relatively far out of the money strike in the same day expiration, I was able to find a contract that was cheap enough but reasonable enough that I could potentially greatly profit while not risking so much capital. So after calculating the risk versus reward, I was willing to buy into a contract right near market open for about 50 cents per contract. Once the market opened, I watched for an entry and saw that the price dropped down towards the trend line and started to bounce back up. You can see here on the 1 minute chart you can see this bounce. I figured this would be as good as an entry to get because it's heading towards this trend line right here as a support, and I went pretty far out of the money considering this would be a 0 data expiration trade. Looking back now, I got just about the lowest possible entry on this position, and I hopped in before the price fully turned around and popped off. The main struggle with buying this position would then be knowing when to take profits. Knowing that Zoom could take off near $10 to $20 pretty easily, I knew that I could eventually be in the money. But when you're buying 0 data expiration, you've got to keep in mind that you're trading against both IV and theta heavily. Keeping this contract longer than 30 minutes, the implied volatility after market open would have died down significantly, and that would have left much more room for theta to eat away at my contract. And I saw this happen instantly. Only 2 to 3 minutes later, I had seen my contract move up around 150 to 180% return, and I thought to myself, wow, this is really taking off. And before I could finish that thought, I saw IV tank as the price had trouble holding over its resistance. You can see here on the 1 minute chart, this is right around where the drop in price was for my contract. After seeing it struggle with holding over this resistance, but it still held over the high of this previous candle, I set a sell order and I alerted that I'd be taking profit if it ended up hitting 200% again. I didn't expect the trade to be over so fast, but this ended up being a 200% return trade in under 5 minutes. I was only holding this contract for 4 minutes and just about tripled my initial investment in this trade. I'm so glad I did this because the time decay and the loss of IV, although you can see here the price continued on higher throughout the rest of the day, about $5 more than from when I had sold it. The contract never ended up reaching that price again after I had sold it right at $9.34. So this just goes to show that with 0 data expiration contracts, the return can be immense, but you need to keep in mind that theta and IV when it comes to these types of trades because your profit can be taken away quickly and your original investment can go to 0 just as fast.
If you enjoyed this video, be sure to leave a like and comment and subscribe to show your support.
If you want to learn more, check out the link in the description below to join Trading Alphas for only $1 for your first month, where we provide real-time alerts to our trades, daily in-depth analysis, and tons of resources to help you become a successful trader.